Hello everyone, welcome to the Ichimoku.co and Forex Trading TV Daily FX Market Review for the trading day ending Thursday, May 29th. Firstly, Euro US dollar. And here we see a continuation of the trend to the downside, very substantial follow through after we saw the breakout down below the Ichimoku cloud, the market rallying on indecisive candles, finding resistance at the bottom of the cloud and then selling off, attempting to rally to the Tenkan and finding resistance there, and then once again for the day prior to today's trading selling off quite strongly. Today a small white body candle, but a candle where the buyers have failed to take control. They've closed just below the midpoint level, giving the sellers still some control, although the buyers have made some net bullish progress as opposed to the sellers for the previous day's trading. That suggests the possibility of a change of trend, but it's unlikely that there will be any decent retracement of this prior first and second time frame downswing. If the buyers do come into the market, very solid resistance around the 136.45 level, and we also have the Tenkan trading just above there at 136.54, and that should hold as fairly solid resistance. One thing to be cautious of is the amount of depth that the market is trading away from the Ichimoku cloud, and that the Chica span is below the corresponding trading. The market is looking a little overextended, so it wouldn't surprise to see something of a rally, but if, as I said, the market does rally, we should see some resistance around the 136.54 level. If the trend does continue to the downside, 135.60 should offer itself as strong support. Next to the US dollar, Japanese yen, and continued trading down below the Ichimoku cloud, giving us a bearish market in that longer term time frame, but a market that has continually found support around the 101.17 level. Between that 101.17 level, 100.74 and the 101.65 level, it has been a very solid zone of support for this market. Look at the amount of times that the market's tested down to within this level and been rejected from there. For today's trading, testing below the 101.65 level, being rejected to the upside from there, and as we trade at the moment, the market once again is finding support at the Tenkan indicator. Any bearish trading activity down there could quickly see the market trading down to 101.17. Any rally may be halted by the resistance at the Kijun at 101.91 and also at the 102.19 level, and above there we have the bottom of the cloud trading just below this 102.47 level of previous support. And here we've seen a bullish breakout up above the Ichimoku cloud for the previous day's trading, or for today's trading. Attempting to rally at the moment through the Kijun, and the market closed around the Kijun. So we have some doubt whether the market can continue with this solid upside momentum that we built for today's trading. Bullish breakout, buyers in control, but what we want to see is follow through, and we want to see a strong bullish candle, and that would probably be reliant on the market trading above and closing above in a bullish manner above this 93.30 level, previous support and now resistance. And at the moment, as the market trades, we are seeing some price rejection from that area. If we do see the market close in a bullish manner above there, we could quickly see the market trading to the 94.40 level, or sorry, the 94 level. Next to the US dollar Swiss franc, and here we're seeing a change of trend for today's trading, a candle with a lower high and a lower low, and that's after the market has been trending very, very strongly following the breakout above the Ichimoku cloud. We have a bullish market in all three timeframes, confirmed by the Chica span being above the corresponding price action. But if we look at this candle, it's a candle where the market made a lower high and lower low, so the sellers were strong enough to take out the previous low, buyers weren't strong enough to take out the previous high, but there was strong price rejection from the 89.65 level of previous resistance in the past, and we can see how this resistance has now turned into support. And with this candle, we've actually seen the buyers close with control, and it suggests that there is a very good likelihood of this trend changing back to the upside again. So we will be watching the high of this previous candle very, very closely. That high is at 89.84. There is good upside potential if we see the buyers come into this market strongly and close up above the current high and test up above the 90 level. We could quickly eventually see this market trading up to the 90.61 area. But I suggest that if we do eventually see the market trade down through 89.65, strong support at the Tenkan trading around 89.43, and then a previous resistance and support level at 89.35.